So the Fed's going to raise interest rates on March 16th. You're like, wait a second, we're not too far from World War III at the moment. Global interbank lending markets may be collapsing. Commodities markets are soaring. The Fed's like, we don't care. They actually don't pay that much attention to it. They're just not that knowledgeable. The Fed is all about transparency, which sounds like a good thing, but it's not a good thing if your idea of transparency is to predict what you're going to do a year in advance and stick to it, regardless of exogenous variables. So, but they've said they're going to raise rates. So here's what's going to happen on March 16th. The Fed's going to have a three-part announcement. They're going to say, number one, the taper's over. Well, we already know that, but they'll say it's over, meaning they're no longer increasing the base money supply with asset purchases. Number two, they're going to raise rates 25 basis points. And I've said that all along. The market got to 50 basis points and 8 more hikes over the rest of the year. I've always said 25, and it is going to be 25, so we're right about that. But the third thing they're going to do, and I don't know whether they're going to do it on March 16th or just sort of preview it, but they're going to say, well, not only are we done expanding the money supply, that was the taper, we're going to contract the money supply. We're going to start selling bonds. So when the Fed prints money, they buy bonds and they pay you, and the money comes out of thin air. But the opposite is true. When the Fed buys bonds, when the Fed sells bonds and you pay them, that money disappears into thin air. So they're going to start reducing the base money supply. So it's a double form of, really a triple form of tightening. No more taper, rate hikes, and by the way, we're reducing the money supply. That's a very extreme form of tightening in a world where the Federal Reserve Bank of Atlanta GDP nowcast, which is it's not perfect, but it's the best forecasting tool I've seen, and one of the best, projects first quarter U.S. GDP growth at 0%. We're more than 2/3 of the way through the quarter. There's more data to come, but based on what they've seen so far, they're projecting 0%, which is a rounding error away from recession. So the U.S. economy is stalled. There's a war going on, massive disruption in supply chains, massive disruption in commodities markets, massive energy price hikes, which we're seeing. And in that world, the Fed wants to tighten interest rates. Okay, but the point is they're going to. That's really my point. They're going to keep doing it. When will the Fed wake up? Probably late 2023, unless there is a full-scale crisis. I mean, if they raise them, 50 basis points or 75 basis points, and all of a sudden this June, I'm not forecasting this, but I'm saying this is certainly a possibility, and we walk right into a global financial liquidity crisis for the reason we talked about earlier, they'll take them back to zero. They did this before, by the way. Remember, they raised rates. The liftoff after the end of the last taper, the first rate hike was December 2015. That was after promising for a full year. Finally, they were embarrassed to get to the end of the year without doing it, so they did. The next rate hike was a full year later, December 2016. So they were sort of 2 years past the end of the taper, and then they matched 2 25 basis point rate hikes. But that, it was like clockwork. So throughout 2017 and 2018, boom, 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 every meeting they raised rates. Well, what happened October 1st, 2018? From October 1st, 2018 to December 24th, the stock market fell 20%. And even then, the Fed raised rates in December 16th, 2018, after the stock market had fallen probably at that point 15%. They raised them one last time, and then boom, the Christmas Eve massacre, and it's down another 5%. Only then did Jay Powell come out and say, you know what, we hear you, we're not going to raise rates anymore. And then shortly thereafter, they began cutting rates, and they got all the way back down to zero. And that had something to do with the pandemic, of course, but
and started expanding the balance sheet again.
Expanding the balance sheet they got it down from $4.5 trillion to $3.7 trillion approximately, and took it up to $7 trillion. So in those, they tried to do this before. They tried to escape the room and they failed, and they had to bring rates back down to zero and take the balance sheet, basically double it. So here we go again. But Wall Street has seen the movie before. We know how it ends. So they're going to start raising rates, and they're going to start reducing the balance sheet. They're going to try to normalize, and they're going to fail again. The only question is when, and that depends on a lot of other factors. But they'll either put the economy into a recession, best case, or they'll contribute to a global liquidity crisis, worst case, and either one's pretty bad. Now that's sort of the module on the Fed, Greg. Coming back to the other part of your question, you're absolutely right. Commodity markets are going crazy. Now, the sanctions on Russia are a big deal, and we'll talk specifically about Russia in terms of what it supplies. But in the Soviet Union, Ukraine was a big part of Russia, or a big part of the Soviet Union. A lot of the high-tech industry, a lot of the manufacturing industry of the Soviet Union was in Ukraine. Also, Ukraine is the most fertile area. Most of Russia's Siberia, right? But Ukraine, its nickname has always been the breadbasket of Europe. Ukraine supplies almost all the grain in Lebanon, 50% or more of the grain in a lot of African countries. It's one of the major grain producers in the world: corn, wheat, etc. Russia is a major wheat producer. So all this, and then of course, not to mention the oil and natural gas. So a couple of things are going on. The Russians are blowing up natural gas pipelines in Ukraine. Why are they doing that? Well, first of all, they want to cut off, they want to put pressure on Europe. They want to put pressure on Ukraine. Ukraine gets a toll charge for all the Russian gas it's kind of ironic. Russia and Ukraine are in a war, and yet Russia's shipping natural gas through Ukraine, and Ukraine's collecting tolls. But that's the world we live in. Don't mess with energy. But they're blowing up some of those pipelines, but this makes Germany even more dependent on Nord Stream 2. Nord Stream 2 was never intended to increase the supply of natural gas to Germany, because they're already pumping all they can, they're taking all they can. Nord Stream 2 was intended to displace the Ukrainian pipelines. So Germany would get the same amount of natural gas, but instead of coming from Ukraine, it would come in through Nord Stream 2. So if you're Russia, why not blow up those pipelines? You're trying to get rid of them anyway. But again, it emphasizes this dependency. But let me give you another concrete example. This has been written about, listeners may be familiar, but the U.S. is threatening, and actually has taken steps to cut off the export of semiconductors to Russia. Russia can't get any semiconductors. They have some of their own, but the most advanced kind, and other kinds of high-tech equipment. And the U.S. is engaging in what's called a secondary boycott, which is we say, well, not only are you not getting anything from the United States, but any country in the world, and this includes China, that relies on U.S. machinery and U.S. technology to create these semiconductors, you cannot sell the semiconductors to Russia either, because you got the equipment from us, you're operating under a license from us, and under that license, we're telling you can't sell it to them. So here's the United States telling China that they can't sell semiconductors to Russia. We'll see how that works out, but that's the U.S. plan. And so, starve Russian industry and aircraft industry and automobiles and consumer durables and electronics and everything else you can think of. Well, okay, how do you make semiconductors? Well, you have silicon wafers, and you have lasers that etch the circuits on them, and there's different kinds of laminations and so forth. How do the lasers work? They're powered by a process form of neon gas. 90% of the processed neon gas in the world comes from Ukraine. So we say to Russia, no semiconductors for you. They say, fine, no neon for you. And now you're talking about shutting down the global semiconductor industry. It's like Russia, we can't get them? Well, nobody can get them because we're turning off the gas that you need to run the lasers, to do the etchings, to make the semiconductors in the first place. Now, can you replace some of these things? Yeah, but it takes years. I mean, you can't just build a neon gas compression processing facility overnight. So some of these, to hear Biden say, well, we're going to get you natural gas from the Middle East, get Europe natural gas from the Middle East. Really? You don't think China's bought all the natural gas in the Middle East? They have. They've done a 10-year take-or-pay contract with Qatar. They're buying all the natural gas they can. Qatar's not going to dishonor those contracts. So there really isn't that much spare capacity. Leaving aside the logistics, even if you had a natural gas supplier, where are the LNG tankers? They're all over the world, so they're not necessarily where you want them. And if you get there, does Europe have the capacity to offload it? And the answer is some, but not that much. And so when you really get into the supply chains, the logistics, the shipping lanes, and how easy it is to substitute, it all sounds good if you're sitting around the White House conference room, but in the real world, it's extremely difficult. It takes time. And there's going to be a lot of suffering, economic suffering on top of the human suffering in the meantime.